Hello, everybody, and welcome once again to our April 2024 ACA Roundup webinar. As always, very much appreciate everybody coming out and joining us this afternoon while we cover some of the important industry updates that we want everybody to be aware of. So, without further ado, let me go ahead and jump right in. As always, just wanted to start with a little bit of the general structure of these webinars. Do this every month just to remind any newcomers. We're doing these every month to cover the important industry news and other updates that we really want agents to be aware of. As always, when we're done here, webinar slides are going to be sent out in an email to everyone who registered for the webinar. And then a little bit later on, we'll be posting the webinar slides and a full recording of this webinar to the O'Neill Marketing Agent Portal. So if you want to revisit anything, those are the best places to check out this information later on. And if you do have any questions during the presentation, feel free to submit those on the Q&A area. You should see it on the left-hand side of your screen. If you put a question in there, we will be answering them via email once the webinar is over. So if you have any questions, again, place them there and we will get you an answer as soon as possible. So we're going to jump right in this afternoon with just some industry news. Top of the list, something I'm sure a lot of people have already heard about, but it does bear mentioning here, and that is that CMS has extended the Medicaid unwinding SEP. Initially, this was slated to end on July 31st of this year. They have moved that back a few months to November 30th of this year. So actually, right smack in the middle of open enrollment. The reason that they're doing this extension is because a lot of states, when they went about removing people from the Medicare rolls and doing all the Medicare unwinding, a lot of states ended up having to extend their own timelines because they weren't getting around to it fast enough. And so because of that, CMS decided that they would have to extend this special enrollment period to accommodate for those states who are taking a little bit extra time to fully unwind all of their Medicaid enrollees. One thing to note, though, is that this extension is optional for state-based exchange states. So that's just something to be aware of. This extension is applied to all federally facilitated states, but each state-based marketplace is going to be able to decide for themselves whether they need to extend their unwinding period, and if they do extend it, how long they want to extend it for. So if you're operating in some state-based exchanges, just keep an eye out for that information, because some states may decide that they don't want to extend it or may extend it to just a different end date. But this is really important because it should give a lot of folks who are leaving Medicaid a little bit of extra time to find themselves a good ACA plan that'll fit their needs. And of course, on top of that, gives agents a little bit extra of a window to apply that SEP to enroll these clients in new ACA plans. And if you need some more information about it, I do have linked here CMS's announcement where they discuss the Medicaid unwinding extension. Next up, I wanted to actually circle back around to a topic we discussed, oh gosh, must have been 10 months ago, I guess now. And that's the short-term medical rule change. So I don't know if you remember back in June or July of last year, CMS had talked about this proposed rule about short-term medical plans, and that rule has now been finalized. So I wanted to revisit it now that it is official. So in late March, really the last week of March, HHS released their final ruling that is regarding the changes to short-term medical limited duration insurance, hospital indemnity, and then other fixed indemnity supplemental health plans. Going forward, I'm just kind of refer to this bucket of plans as STM or short-term medical. Just keep in mind that it is applying to more than just technically short-term medical, but for to save myself from repeating that whole sentence every few minutes, I'm just going to call them short-term medical from here. So initial short-term medical plans, when this rule goes into effect, are going to be limited to no more than 3 months of coverage with a maximum coverage period of 4 months. And that does include policy renewals and extension. These updated rules go into effect on September 1st of this year. So still got a little ways away, but it is coming up pretty fast. So once that goes into effect, again, 3 months of coverage to start with a maximum period of 4 months. And then additionally, policyholders are not going to be able to be sold another policy by the same carrier within a rolling 12-month period. This is something that's typically called stacking. Probably you've already heard of it, essentially where you could just continually sell them the same product. They're kind of trying to get in the middle and stop this from happening. So, for instance, if you had a client on a Allstate short-term medical plan, that could run for 4 months, but then you would not be able to enroll them in another Allstate 4-month plan for short-term medical once that plan is expired. You would have to either enroll them in, an ACA plan, which is I think what CMS would prefer, or if they did need another short-term medical plan, you would have to go and not only find another plan, but another plan with another carrier. So they're kind of trying to edge out those long-term short-term medical plans that we'll see a lot nowadays. And so just to reiterate too, this duration rule change does not take effect until September 1st of this year. So there is a little bit of time until this fully goes into effect. And any policies that are sold or issued before September 1st of 2024, and that does include any subsequent renewals or extensions, those policies can continue to have that initial term date of at least or up to 12 months with a maximum duration of 36 months, which is an occurrence with the current rules regarding short-term medical. So if you enroll someone in a plan before then, the current rules still apply. They could have that plan for 12 to 36 months when you take into account renewals and extension. After September 1st, though, any short-term medical plan, the longest that's going to be able to last is that 4 months, 3 months initially and 4 months with an extension. And then if you do have anyone currently on those plans, once they expire, if it's after September 1st, if they do want to, do another short-term medical plan, just keep in mind that their duration is much reduced. And again, similar with the last one, I have included the CMS fact sheet on this rule change linked right here. I just wanted to mention too on that note that there actually is a lot more to this rule change, just more than just the duration of these policies. There's a lot of stuff about hospital indemnities and some other kinds of plans. I didn't want to dive too much into that right now because really this duration change is what I think will affect our agents the most. But that being said, if you are interested in some of the other tweaks and changes that came about with this rule, or you do sell a lot of hospital indemnity or other plans in that area, I would still highly encourage you to check out that fact sheet just to see if any of the other rule changes will affect your clients. Next up, I wanted to touch on something again, I'm sure a decent amount of people have seen. It's regarding Ascension or US Health and Life. They are no longer going to offer marketplace plans after 2024, so effective January 1st of 2025. Current Ascension members are, of course, still going to be covered until the end of this year. So it's not like Friday, perhaps last year, where they had to get off a plan earlier than that. Nothing on that regards, but during open enrollment this year, they will have to select a new plan with a new carrier for 2025. And I wanted to note on this as well, we wanted to kind of tell everybody here because, we know this will impact our agents, and it's an email that might have gotten missed, or maybe it's just not something that you're really aware of. So we did want to mention it to you guys. But that being said, Ascension has said that they're going to notify their members starting on July 1st. And they have asked agents to refrain from sharing any information about this planned withdrawal until that time, really just because Ascension has kindly asked that they can be the first person to break the news to their client. So again, we wanted to make sure that this was known to all of our agents, but if you can hold off on telling your clients on Ascension plans until after July, that is what Ascension has asked. So we would definitely recommend that you go ahead and just hold off on that for the time being, at least. And then again, if you missed the initial email, I have linked their initial announcement here where they announced their withdrawal. And then I've also linked a follow-up clarification where they discussed more about how they're going to communicate with members. And that's also the email where they asked agents to hold off on notifying their members until that time. But we think this is important, so we definitely wanted you all to know right now. Then another kind of important piece of news that we wanted everyone to be aware of, if you haven't already heard, is the 150% FPL SEP extension. I'm just going to call it the 150% SEP from now on, again, just to save myself the acronyms. So on April 2nd, CMS released the finalized 2025 Notice of Benefit and Payment Parameters, again, usually shortened to NBPP. And that has updated rules and requirements for marketplace brokers, issuers, etc. Probably already familiar with this generally. This is, what they released last year that upped the ante for consent, and when they establish a lot of other rules like that. So one of the plethora of rule changes that was included in the 2025 NBPP was a rule change that extended the SEP for the consumers who have incomes at or below 150% of the federal poverty limit. And again, if you are not already aware, this is the SEP that allows people making 150% or lower to have a year-round SEP so they can really enroll in plans year-round. They don't need any sort of other SEP to qualify for that. So what this rule change has done is it's allowed this 150% SEP to continue past its initial expiration date of 2025. So a little bit of background here without getting too deep into it. When this SEP for 150% FPL and below was initially released, it came with a lot of the COVID acts of the Inflation Reduction Act and the American Rescue Plan Act. And it was linked initially with the extended subsidies, because in that first act, they also increased subsidies pretty much across the board for all Americans under 400% FPL, of course, when it comes to ACA. And so when those extended subsidies were granted, pretty much anyone with 150% FPL household income and lower was kind of always going to be guaranteed a $0 silver plan. And so this SEP was introduced because essentially the thought process was these clients or these consumers are always going to be able to get a $0 silver plan. So there was less of a hazard of allowing them to have a year-round free SEP to enroll in plans at any time. But initially the thought was when those extended subsidies were brought back, again, when they sunset in 2025, that this would kind of be part of that and it would be at least reconsidered then, if not just totally scrapped. But one this most recent NBPP has done is they have uncoupled this 150% SEP with the subsidy extensions so that this can continue past its initial expiration date of 2025, even if those extended subsidies do not get renewed or extended. That being said, if they do renew the subsidies or the extended ACA subsidies are continued past 2025, that's excellent, and it wouldn't really have mattered anyways. But just in case, if those subsidies are not extended or continued past 2025, at the very least, it's seeming like the 150% SEP will be able to continue past then, even if the subsidy calculation is not exactly the same. So I think this is pretty important for ACA agents. It's been a huge boon to the industry, really allowed a lot of low-income Americans to enroll in plans year-round and not be beholden to the open enrollment cycle that everyone else is. And of course, it's helped make ACA more of a year-round industry, which is really great for some of the career agents in the space. So we were certainly happy to see it and wanted to make sure that everyone was aware of this. The one caveat, though, that I do want to mention is that, of course, this extension, like the 150% SEP in general, is optional for state-based marketplaces. So always state-based marketplaces have had the option as to whether or not they wanted to adopt this. Most, if not all, already have adopted this SEP with, I think, few exceptions. But that being said, state-based marketplaces are still well within their right to decide to not extend this SEP past its 2025 deadline. So just again, another thing to keep in mind, most states have adopted this, and I expect that most state-based marketplaces will continue this SEP, but it is something to keep an eye out for. And as always, I have some resources here at the bottom. I've included the press release for the NBPP that was released in early April, as well as the CMS fact sheet. Those are both pretty similar, covering the same pieces of information. And again, similar to the last slide, it is worth noting that there is a lot more, of course, in this NBPP than just the 150% SEP extension. Frankly, we could probably do an entire webinar just on the NBPP and all the rule changes. There was less, I would say, less dramatic changes maybe than last year's rules when they we're talking more about consent and a lot of stuff like that, but there's still some stuff in there. So if you are interested, I know that CMS is or has been doing, I'm assuming will continue to do webinars about these rule changes. And they also have released this fact sheet that kind of summarizes it and simplifies it if you're interested. And if you are really, really wanting to hear it from the horse's mouth, the last link right there is the full final rules. It's not for the faint of heart, I'll be honest. It's, I think, 750 pages. But if you really, really want to see the exact text of the rules, I have included it just in case that's your cup of tea. Moving on, we have some information about Molina background checks. I'll preface this by saying this is fresh off the press. I think Molina just announced this yesterday afternoon, so I'm sure there will be more information coming out about this over the next few weeks and months. But really, the bottom line is that Molina has announced that they're going to be doing new background checks on all agents who have been appointed with them for at least 2 years and have active enrollments under Molina. For those of you that are more concerned or want a little bit more information, they've said that this background check is going to consist of an FACIS level 3 background check, as well as a nationwide county of residence and federal criminal history background check. I assume that they're, of course, doing this for all their new agents. And really, I think what this is they're going back and doing it for those agents who have been appointed with Molina for a while, essentially to maybe make sure that nothing has happened in those 2 years. So really what it's going to mean for agents is if you're slated for a new background check, you're going to be getting a link from Evolve asking you to sign the background check agreement. And this approval is going to be for the lifetime of your active appointment status with Molina. So it's hopefully not something you'll have to sign over and over again. But the really important thing to keep in mind is that they have said that failure to sign this form will result in contract termination. Even if background is totally clear, nothing to worry about. If you do not sign this form, they have said that they will terminate your Molina contract. I would assume, again, this is pretty new information, so we'll see how it all shakes out. I would assume that they are going to have a little bit of leeway as far as timeframes for doing this, and I assume they will send you multiple notifications, especially as it gets down to the wire. But even if you have questions or you're concerned about it, I would still say, if you want to ask them any questions, you would have to talk to Molina. But if you see this form come in, I would recommend you sign it as soon as humanly possible, just to get it off your plate so that you don't forget and accidentally result in a contract termination. Molina's also said once the background check starts, they usually take less than 72 hours to complete, but some might take longer, especially if there are things in the background check that they need to follow up on. And I think specifically if you have a criminal history, that's something that will take them a little bit longer. But again, just when you see this email, make sure to sign that form as soon as possible. And if they need any other information, just, I would say provide it to them as much as humanly possible. It should be a lot of the same stuff that they do when you're getting licensed. But again, this is coming from Molina, so we'll just have to work with them on that. And then the last thing to note, they have said that, of course, if the background check fails due to more recent findings, you will be notified, of course, but if you fail the background check, it seems like your Molina contract will be terminated. So again, just follow up on that. If you do get a notification that you failed the background check, they have said that you will have the opportunity to appeal that decision. So it's just something we'll want to keep an eye on. At the very least, though, look out for that email from Evolve with that link. And you'll just have to sign that agreement as soon as you can. And then if anything does come up, you'll just have to work with Molina to figure out what the next steps are. Again, this is very, very new, so I'm sure we'll have more information on this as they start going about. Next up, I wanted to just jump right into some O'Neill marketing news, some stuff from our team that we wanted everybody to be aware of. As usual, we're going to start with some updates from the contracting team. Point number one, I'm sure a lot of you are already aware because this is very important for most of our agents. Ambetter is now open for contracting transfers. They opened back up on April the 15th, but a really important note is that they are only going to be open for transfers until the end of June. So after June 31st, Ambetter is not going to be accepting any new transfers. So any transfers submitted to Ambetter after June 31st will not be processed. So if you do need an Ambetter transfer, please make sure to follow up with our contracting team as soon as you get that email and get everything submitted as soon as humanly possible. Again, I know it's only the end of April right now, but every year we see it. It really does creep up on you, and especially when carriers are starting to limit the time of the year that you're allowed to make transfers. We always hate to see people that wait and submit it the first week of July and just miss out on it. So if you do need to transfer your Ambetter appointment, please make sure that you fill out that paperwork and get it submitted to Ambetter as soon as humanly possible. Should have already gotten an email from contracting@o'neillmarketing.net if you requested that transfer during their blackout period. If you haven't requested it, definitely jump into your portal and go ahead and request that transfer now. And our contracting team will send you an email with those instructions. And as always, if you have questions about those instructions or need a little help or anything like that, feel free to reach out to contracting@o'neillmarketing.net, and they will be more than happy to assist you. On a similar note with Oscar, their transfer blackout has not quite ended. It's slated to end on June 1st, but like Ambetter, they are only going to be open for transfers from June 1st until August 31st. So essentially, about 3 months are going to be open for transfers. So it will, like Ambetter, be crucial that you complete all those transfers within that 3 month period. Again, similarly, if you've already requested that transfer, we will send you an email once those transfers reopen, and we'll just give you instructions on how to start the process. Again, if you are interested in an Oscar transfer, might as well go ahead and request it now just so that it's in the books. And so once that reopens, our contracting team will reach out. Or if not, just make sure, again, beginning of June, that you are on top of that and getting all of that contracting paperwork filled out and submitted to Oscar by the end of August so that your transfer can be put into effect by the time that open enrollment comes around. And just kind of an overall note too, I think we've said this in, yeah, I think we said this in every single ACA Roundup webinar that I have done, but it always bears repeating that it's just super important to keep an eye out for emails from contracting@o'neillmarketing.net and make sure to follow up with all the paperwork and pending requests. If you have any questions, you're always welcome to shoot them an email there and they can help. But emails from contracting@o'neillmarketing.net are the primary way that they're going to send you instructions or important forms. So just make sure you're getting those emails. And also, if you do notice these emails going to spam, would highly recommend that everyone whitelist the o'neillmarketing.net domain just so that you can make sure that our emails aren't getting directed to your spam folder. And we wanted to mention another contracting update, mostly around Cigna. So Cigna has changed their contracting process to be just in time for all non-resident licensed states. What that means is that when you get a Cigna appointment, Cigna will appoint you first just in your resident states, and the non-resident states will not become quote, active until the first policy is sold. And when I say active, that means for the state DOI, it's not going to be listed as an active appointment, essentially because they have to pay fees and all that stuff before your appointment's active. So they want to see that you're actually selling business before they shell out some money to the state DOI to pay for your active appointment. So again, when you first get the appointment, it's just going to show you active in your resident state. But if you're licensed in a non-resident state, once you sell there, that should be switched over to active. And again, per Cigna, you'll actually no longer need to even request the additional state appointments before selling in your non-resident states. So that hopefully will be a big benefit. You won't have to worry about adding all the other states. As long as you're appointed in your resident state and you have a license in that non-resident state, you'll be able to sell the Cigna products there without having to worry about adding that state to your appointment prior to selling those products, which is, I know, a benefit for agents that you don't have to worry about the whole state list every single time you sell something. Cigna has also said that they're gonna appoint non-resident states at the time of sale, and that the average turnaround time for those state additions is 2 to 5 days from the time of sale. But again, from what they have told us so far, once you make the sale in your non-resident state, they'll turn that around within 2 to 5 days. That should be marked as active for you, and they'll update in their system so that you can receive commissions for those policies in non-resident states. And then the last thing that I wanted to note about this, just in case you see this, that Cigna welcome letters going forward may only list your resident state. So whereas in the past, it would list all the states that were added on your appointment, now most likely it's just going to list your resident state, maybe a few others. And so once you receive your welcome letter, you'll be able to sell Cigna in your not only your resident state, but your licensed non-resident states, even if they are not listed. Again, as with a lot of other things, this is kind of a new developing contracting change, so I am sure we'll have more information or clarification on it in the future, but we wanted to make sure everyone is aware, just in case you see that welcome letter not listing out all the states, or you see something similar on your portal. Really what they've said, as long as you have the license there, you are licensed, certified, all of that good stuff, you should be good to go ahead and sell Cigna products where they're available. And I also wanted to highlight something that's kind of in the pipeline. We'll be talking certainly more about in the coming weeks and months. It's going to be a new major medical product that we're going to be offering. They're coming from a company called SunCare, who we work with. The two plans really are the PCHS multi-plan PPO and a Cigna PPO. So again, these are off-market major medical products that would kind of take the place of ACA. So some of the top level benefits of these products, first and foremost, it's available in all 50 states. It is PPO. They have simplified underwriting for these policies. Each policy has an automatic renewal. US citizenship is also not required for these policies. And on the agent side, all of these policies have lifetime level commissions that we think are very competitive. So again, there will be more information released on these plans in the near future. We'll be sending out some emails about it, and then we're also planning to do a webinar with them to discuss a little bit more about the breakdown of these plans. So certainly stay tuned. But we are very excited about this, especially because, as we mentioned a handful of slides ago, the upcoming change in the short-term medical plan duration. We think these kind of products are going to be a nice segue for people that were relying on 12-month short-term plans to get their health insurance from, since after September. If you sell a short-term plan, it's really going to be limited to just a few months. So if you're finding yourself with a client who doesn't want to get an ACA plan, either because they don't have subsidies or for one of the myriad of other reasons that someone would choose to not do an ACA plan, whereas you maybe used to look for a short-term medical that you could put them on for 12 to 36 months, these will be great products to fit in there. Because again, we think they're competitive, they're PPO, they're modeled kind of similarly with the marketplace plans, and we think that if you have clients who want a long, qualified major medical plan, but don't want to get on the marketplace, this is probably going to be a really good option for them. So if this is something that interests you, definitely make sure to stay tuned and watch out for when we start talking about this more and plan webinars for it, because I think there's going to be some really great information they can provide for these plans. And then kind of just to close out this month, we wanted to just briefly retouch on some compliance points. I'm sure a lot of you all have seen an increase of emails from carriers, from CMS, et cetera, about compliance. It's kind of a hot topic in the industry right now, if you haven't noticed. So we think it's always worth repeating some of these important compliance issues that have been cropping up with CMS and carriers again and again. So first and foremost, pretty sure everybody knows you do have to have proof of consent for all the new enrollments and policy changes. The important thing is the policy changes is that does include an AOR change. So you have to gather new consent prior to making any policy changes. So if you have the consent from the initial enrollment, but then you go back and make changes to the policy, just keep in mind that you'll have to gather new consent before you make those policy changes, since CMS has said that those old consent forms are not going to suffice. Again, sure, there's a lot more gray area to this. Really, once the rubber hits the road, it's not always as clear as they make it out, but that really is CMS's top line. And so we wanted to make sure everyone's aware of that, because we think that compliance is going to get more and more important as the years go on. And again, too, just a reminder, you can save consent in a digital form if they're just signing an electronic document. That is fine for the consent documentation. But on top of that, we really do highly recommend that you do record all of your phone calls with clients. As of right now, don't believe that it is mandatory by CMS, at least for ACA sales, but it is always a good thing to have in your back pocket just in case. If you never need to use the client recordings and you have all your consent documented on a form, that's fantastic. But just trust us, the moment you need that call recording for whatever reason, you're going to be very, very glad that you were recording that call. Next up, another mention, we mentioned this last month, but I do want to bring it back up. Some lead vendors will provide pre-filled consent forms for the clients, and CMS has said that generally these will not suffice for the consent. CMS recommends that agents gather their own consent from each client prior to searching the marketplace. So if your lead company is offering to sell you leads that already have pre-filled consent, perhaps that's useful, maybe worth looking into a little bit more and getting into the weeds with it. But CMS has said, as a rule of thumb, more often than not, that's not going to meet the criteria that they need. So it's always in your best interest to gather your own consent when you connect with that client prior to searching them on the marketplace and making any plan changes. And then the last real reminder coming from CMS and carriers is that agents have to ensure that consumers are aware of the products that they are enrolling in. This is something we've seen pop up again and again where clients are not 100% sure of what they're signing up for, or in even worse cases, they thought they were signing up for something completely different. There's a lot of nuance to this. There's always instances where it's just a problem of misremembering something, this, that, or the other. But it is an issue that, again, according to CMS, has just been cropping up over and over again. So they've asked agents to make sure that they're not implying that subsidies or cost sharing reductions can be directly used for groceries, for rent, for food, etc. CMS really wants agents to make it known that these benefits are used solely for health plan premiums and cost. So even though they're getting a subsidy, which technically you could use those savings and apply that to other things, CMS really doesn't like it when it's implied that these subsidies and stuff are being used directly for groceries or rent. That's a very specific thing, I will say, that they have pointed out multiple times because it is something that, again, keeps on popping up again and again. And then the last thing that they've said too is that all carrier wellness benefits have to be described as earned instead of just a guarantee. So again, these are the major top level items that CMS has been hitting on a lot. And so we just wanted to point them out to everybody, make sure that everyone is aware. Again, as the days and months and years go by, compliance becomes more and more important, especially as CMS is stepping in and taking more of an active role in ACA compliance. So we wanted to make sure everyone's aware of that. And then moving on, really, this next slide is about what to do if you do get a complaint or a compliance request from CMS or a carrier or Health Sherpa. I'm sure a lot of people have seen the emails when they come, either from CMS. Sometimes they come directly from a carrier. Sometimes even Health Sherpa will send you a compliance complaint or maybe a request for proof of consent or anything like that. So it's just really important when you do see those emails come through that you just promptly respond with the evidence that they are requesting. Sometimes they'll give you a longer time frame. Maybe some instances they'll give you a little bit longer than others. But that being said, we would really just always recommend, as soon as you see that, as soon as you can, give them a reply, include all the proof of consent that you have, and just get that taken care of. Because failure to respond within the required time frame can and will lead to the loss of appointment, loss of commissions, and in worst case scenarios, even the termination of licenses. So it's just really important that when you see that come through, take care of it as soon as humanly possible. Cannot emphasize that enough. Sometimes, carriers will give you lots and lots of requests, but if the time period expires, carriers will happily just terminate your appointments, which means you lose all your commissions, you'll have a hard time getting reappointed, et cetera, et cetera. So just make sure you're collecting the consent, and when they ask for it, just make sure you give it to them as soon as possible. And then the last note on this too is that O'Neill Marketing, we have been implementing a compliance team to help facilitate communication with the carriers and make sure that all the agents and agencies who work with us are remaining compliant. So again, similar to above, if you do receive any emails from compliance@o'neillmarketing.net, make sure that you're opening them and addressing the concern as soon as possible, because frankly, typically if a carrier is reaching out to O'Neill Marketing about a compliance complaint, 9 times out of 10, it's going to mean that they're already trying to reach out to the agent and have not gotten a response. So if you're getting emails from compliance@o'neillmarketing.net, definitely pay attention and make sure to follow up on that concern as soon as you can. And just one last note on that too. Our compliance team is not here to provide the proof of consent or respond to carriers on your behalf. Really what we want to do is make sure that you're aware of any pending compliant issues that have been brought to our attention, and to help make sure that those are getting resolved within the time frame requested by Health Sherpa, carriers, CMS, etc. And so if you do have any questions about compliance or any complaints that come into you, that can also be a great resource. You feel free to email our compliance team at compliance@o'neillmarketing.net, and they can look in and figure out what we can for you. But again, if you are receiving emails from our compliance email address, just make sure that you're opening them and taking care of them as soon as possible. And just to wrap it up, I do have just some resources about compliance. These are, what I found to be the most useful and are the most circulated. Again, CMS, Health Sherpa, carriers even have loads and loads and loads of resources when it comes to compliance. These are just some of the top level items that I wanted to include because they're the ones that I turn to the most and the ones that are most widely shared. So we've got consent FAQs, review of accuracy FAQs. CMS has an FAQ on changing the NPN and some of the questions around that. I've also included Health Sherpa's active consent article, which is very, very great. I've included this numerous times in previous webinars because I really personally think that it is a fantastic article. Goes over some of the compliance requirements, but on top of that, it also kind of describes what Health Sherpa has implemented to make the gathering and storing of consent easier for agents. So especially if you're an agent who maybe has been struggling to implement the consent gathering into your normal sales pitch, I would highly recommend that you check out that article and see what's already built into Health Sherpa, because Health Sherpa has been adding a lot of features and functionality that help make the gathering and storing of consent easier for agents who are using Health Sherpa. And then again, at the end, I have some CMS marketing advertising guides. I've got an FAQ on the 2024 payment notice from CMS, which again is where those consent and proof of consent rules were initially released. And then again, for any amongst you who really, really just likes to get into the nitty gritty, I have included the full text of those rule changes from last year at the bottom link. Again, not for the faint of heart. It is long, it is dry, but if you really want to hear it from the horse's mouth, you can check out that bottom link, and it's got the full legal rule right there, if that's more your speed, and God bless you if you do. And just to finish it up this month, I just want to say the date for the next Roundup webinar. We've got it scheduled for Wednesday, May 29th at 2 p.m. Just wanted to point that out specifically because until now, I believe every single ACA Roundup webinar we've done has been on the last Tuesday of the month. We had to shake that up a little bit just because the last Tuesday of May was the day after Memorial Day. So we figure probably want to give agents a day to unwind after hopefully a very long, lovely weekend. So moving it back a day, it's going to be the last Wednesday of May, as always, at 2 p.m. If you want to go ahead and register now, I've got the link included right in here. If not, we'll have the link posted on our website shortly. And of course, we'll be sending out emails and texts about it once we get closer to that date. All right, and that brings us to the end of our April roundup. As always, we really appreciate everybody coming out and joining us month after month. We really value this opportunity to give everybody crucial information that we want agents to be aware of. So we appreciate y'all coming out and giving us your attention for 30 to 40 minutes every month. As always, our support team is here and happy to help. The phone number and email on the screen are the best way to reach out. So if you have any questions, need anything at all, please reach out to our support team, and we are more than happy to help you however we can. So thank you everybody so much. I hope you take care. Have a great rest of your week.